It is crazy busy over there.
Yeah.
A lot busier than last year. The energy is electric. Yeah, it feels like a feeding frenzy.
Yeah.
Everybody is talking about what they love, and
Yeah.
it's going up, and everybody's bullish.
Can you tell, what are you hearing about what people love? Can you put it into a couple of sentences?
I mean, really, it's all they're doing is talking about pretty much how much they've made in the last month or the last couple of days, because things just keep spiking, right? And yeah, it's just everybody's excited about the gains. I mean, it's coming so fast. Like silver, it feels like is up 5% every day, right? It feels like free money. It's coming that fast, and it always scares me when you get money like that. Easy come, easy go.
Yeah.
You know, you look at the charts, the monthly chart of silver, and you go back to the 70s, you see a few other spikes in there. It doesn't take a brain surgeon to figure out what could happen, right? I'm not saying it's going to happen, but you need to protect your capital. This is the thing, everybody's talking about how much they're making, how much they're up. I focus on like, okay, how much can you keep and not waste time? So I do believe there's a time to trim, lock in some gains, reduce some exposure. You can always buy it back later. So I just believe we're getting into this really frothy phase, but I still think there's a lot more room to the upside before we actually peak.
Technically, silver appears to be approaching a critical zone. Momentum targets suggest prices could stretch beyond recent highs, possibly triggering a dramatic short squeeze. In euphoric phases, markets often overshoot rational expectations. Gold could surge alongside it, accelerating towards psychologically powerful milestones. But parabolic rallies tend to burn hot and fast. They attract latecomers driven by fear of missing out, adding fuel just before exhaustion sets in. If silver surges toward triple-digit territory, it may mark not the beginning, but the climax of the move. These emotional blow-off tops often create both extraordinary opportunity and extraordinary risk.
Well, I mean, we have a $106 target on silver, which I saw it closed at like 103 on Friday. So we're 3% away from there. I feel like that target is based on just chart patterns, technical chart patterns. That is where momentum is probably going to run out a little bit. I think we might see a little bit of a pause or pullback. But in the big picture, I still feel like the feeding frenzy is just actually starting in the precious metal space. I think we could see a big move up. So I think in the next 1 to 2 months, if not in the next couple of weeks, we see silver have this huge squeeze. We see a rally to 120, 130, 140. I think we see gold go absolutely ballistic, potentially 6,000. I think it's going to be a huge euphoric move. I think it'll be short-lived, but it is going to be pretty darn exciting, and that is going to draw in the rest of the people who aren't in metals to get in. And they're the ones who are going to feed it higher. And that is when I think people need to be aware, hey, you might want to lock in some gains, because there's more downside risk in the near term than there is upside potential.
Don't tend to look at things like gold or silver especially, and they're just frothing for that now. So I can imagine there's a lot more people like that.
There is. A ton of people are piling into the space. I'm super excited about silver. I'm heavy weighted in silver, always have been. But the amount that it's going up, I mean, you just look at your account, it's just insanity. And it lures everybody in. And this is the thing, when you get big moves, emotions are starting to get rampant, people lose logic. They lose sight of what's going on, right? People just start making bad decisions. And I'm not saying getting into metals right now is a bad decision, but I believe it would be nice to wait for some pause or pullback before you jump in. Like a pause or pullback is a little bit of a reset. And so people piling in from here and up, if it just keeps screaming, they're really blindly FOMO-driven moves. That's the way I see it, because you can always get in after some type of correction. And it doesn't matter if it's higher. It's just get in after some of the risk has been cleansed out of that market. So you can get in and then it hopefully continues to go higher.
While metals heat up, equities are flashing caution signals. Technology heavyweights and AI-related stocks, once market leaders, are showing signs of fatigue. Venture capital poured unprecedented sums into artificial intelligence, but infrastructure strains like data center capacity and financing pressure are emerging. When banks grow cautious, markets often follow. Historically, rotations begin quietly before becoming obvious. The same patterns seen before prior corrections are reappearing: narrowing leadership, topping formations, and momentum divergence. A reset in stocks would not be unusual after such extended gains. Markets don't collapse without warning, they whisper first.
Yeah, so when you look at, there's an ETF, the MAGS ETF, it shows the basket of all of what they're doing. And they are forming what looks to be a topping pattern. We saw this similar pattern happen in February of 2025 last year.
Right.
We saw them fall about 20+%. That pulled the stock market down. The same setup's happening right now. But this time it feels like the AI space is losing a lot more of its shine.
Okay.
I feel like it's lost its momentum because what we're seeing now is there was the huge move into everybody funding AI businesses. The venture capital was insane. That money going into AI makes every other bubble dwarfed in terms of dollars invested.
Okay.
And now we're starting to see banks starting to not give loans for data centers. Things are starting to get tighter. So that bubble, that even the banks are feeling it's frothy.
Right.
That is not a good sign. If the banks already know something's done, we're like way overdue. So I think we're going to see a big correction in the equity space, and we're going to see a big reset this year, I think.
Are things like you mentioned, like data centers, are those things that are becoming roadblocks to AI stock success?
I think they are.
Yeah.
I think there's some, I don't think we're quite at the roadblock space yet, but the speed that everybody's implementing it and the data and the power required,
Right, yeah.
it could be a roadblock if it doesn't get in place sooner than later. So,
Okay, just touching on some of the things that you touched on, risk management is a core part of your work. You've alluded to this in our discussion so far, but where do you see investors taking unnecessary risks?
I believe the stock market has quite a bit of risk right here.
Okay.
We're long equities and we're long precious metals, don't get me wrong, but I don't think there's a ton of upside in the equities space. So
Okay.
I'd be cautious. I wouldn't go dumping your life savings into the market right here if you're just getting into the space. I'm not sure where they're taking excessive risk other than, I think precious metals has got a little bit of risk. I think it's going to have a very strong pop and rally here.
Sure.
But the thing is, people don't like to sell. Selling is boring. Nobody wants to talk about it. And if we do get a very strong pop, if somebody was to get into silver right now and it goes to 140 in a week or two or three, right?
Yeah.
They're not selling.
Yeah,
Those people are
right.
like, this is amazing. This is the best investment I've ever had. And then, of course, it'll fizzle out. And then everybody will be like, what was I thinking? I was like a quick, easy 40%. Right?
Yeah.
So I think right now it's just you need to be cautious of what you get. And I think you need to have an exit strategy. You need to be able to trim off profits, lock in gains.
Yeah.
Understand it's not about making the maximum and selling out 140 silver and being like, I got it, because most people won't do that. I think that's just, you guys have to have an exit strategy. Be happy with gains. It's not about making as much as you possibly can.
Right.
It's about how much can you make and how much can you keep. That's the key, is keeping it. So
Bitcoin once held the narrative as digital gold. But as physical metals regained momentum, capital began rotating. Cryptocurrencies have experienced significant drawdowns during previous liquidity contractions, and current chart structures suggest vulnerability. Asset rotation often signals deeper shifts in investor psychology. When money flows out of growth assets and into hard assets, it reflects changing risk tolerance. This transition phase can be volatile. Bitcoin, equities, and speculative sectors may face pressure if liquidity tightens. Meanwhile, precious metals could temporarily benefit as capital seeks perceived stability. Rotation is rarely random. It reflects evolving macro priorities.
Chris, I've got to ask you about Bitcoin. Again, frontline like you are, the expert you are, what are you seeing? What are your predictions?
Yeah, so a lot of people were used to look at Bitcoin as the digital gold, right? Pretty much gold was dormant for a while and everybody moved into the crypto space.
Right.
Now, what I think we're seeing is all the gold traders moving away from crypto,
Right.
which is why it's down fairly dramatically, about 30%, and they're all back into the precious metal space.
Right.
So the Bitcoin chart does not look good. It has formed a big bear flag pattern. It's pointing to about a 30% sell-off, which falls in line with what the Magnificent Seven stocks look like they're ready to do, what
Right.
the overall stock market in general is ready to do. So this is the big thing, is people are giving up on assets and they're moving to a new one, and that's usually a sign of asset rotation, is a sign that big changes are happening. And so if they're moving out of Bitcoin, now they're starting to move out of equities, it's going to go to where there's a return, which is
Right.
precious metals right now. So
Yeah.
precious metals has got this sweet window where money's coming out of a lot of pockets and kind of moving in there. But I'd be looking for about a 30% haircut, like $50,000 Bitcoin or lower. Wow. In the next move.
The hardest discipline in investing is selling. Few want to trim positions when gains are accelerating. Yet markets reward those who protect capital. An exit strategy is not pessimism, it is preparation. Even during powerful bull markets, pullbacks are inevitable. Locking in partial profits creates flexibility and emotional stability. Investors who fail to define targets often ride gains up and back down. Successful risk management means accepting that no one captures the exact top. The objective is sustainability. Wealth compounds when capital is preserved. In overheated conditions, prudence often outperforms prediction.
You led me beautifully into my last question. What do you say to our viewers out there that say, precious metals stock, I'm not interested, where can I go?
Yeah, there's not much to go to. Like
Okay.
I think even real estate's overpriced.
Yeah.
There isn't really a safe spot to go, and this is what a lot of people I don't think want to accept, is that cash is a position.
Right.
And if precious metals are close to maybe going dormant or pulling back, equities are about to top, Bitcoin looks like it's going down, sometimes moving to cash is the best thing to do. The key is, where do you put that cash?
Yeah,
and
okay.
I think the US dollar is actually one of the top places to put it. The charts are pointing to the dollar having about a 17% rally. And what happens is,
Wow.
right now everybody wants gold,
Yeah.
silver. Nobody believes in the dollar, right? You have two yin and yang opposite positions.
Right.
So I think we're going to see a bit of a reversion to the mean. We're going to see metals come down, the dollar is going to go up. And whenever we see an economic downturn, the US dollar index tends to perform very well.
Right.
And this, just because they're a powerhouse, people trust it. It's just the way the currencies tend to move. And so I think holding cash in US dollar, obviously I'm Canadian, so I want to hold it in US dollars because that is a currency where I can make money.
Sure.
There will be a point potentially in 12 months or a year from now or 2 years from now where you want to get out of the dollar.
Right.
And you want to own potentially a Canadian dollar, the loonie, or get back into precious metals for a big move. So the safe spot is a cash position. And
Okay.
it actually has got a lot of potential. For
Sure.
somebody who's not an American, where the dollar goes up, we could make 17%.
Right.
And just a currency exchange alone, and then cash back to our own currency.
In uncertain environments, cash becomes an active strategy, not a passive one. The US dollar historically strengthens during periods of global stress, offering relative safety amid volatility. Currency cycles often move counter to commodities, creating opportunities for patient investors. Holding cash can provide optionality, the ability to act when valuations reset. There may come a time to re-enter metals or equities at more favorable levels, but timing requires patience. Markets move in waves of enthusiasm and contraction. Those who step back during extremes are often best positioned for the next major advance.